This week in Bitcoin mining news, an executive shakeup at Mara and Ionic Digital comes out of the woodwork with an AI deal. This is the Mining Pod brought to you by CleanSpark. We've got a few other news items as well, including a study that says that the PJM interconnection market needs 43 gigawatts of battery storage by 2045 in order to support the grid as it adds new AI and HPC load. Plus, Bitdeer's gangbusters September and their plans for AI and HPC in 2026. BlackRock striking a $40 billion AI data center deal, biggest yet in terms of an acquisition. And for this week's Cry Corner, the U.S. government seizing $14.1 billion and potentially an additional $2.4 billion from a cryptocurrency international scam syndicate. This is the Mining Pod. Thanks for joining, y'all. Guys, there is a serious problem right now in Bitcoin mining, and we need to talk about it. You need to pay attention to this. Bitcoin miners are identifying as AI companies, and people keep missectoring them because they say, well look, your infrastructure is clearly for Bitcoin mining. What do you want me to do about it? I'm going to tell you what you need to do. You need to call FBox, the leading digital infrastructure company with all-encompassing cooling solutions. FBox designs industry-leading air, hydro, and immersion cooling systems for Bitcoin mining and AI and HPC data centers. I want to highlight that. If you're a Bitcoin miner who needs to bridge the gap, if you're pivoting or doing hybrid operations, they can build cooling solutions and infrastructure for both your Bitcoin mining and your AI and HPC operations. And they have an in-house API that lets you monitor it from the web or on mobile. So go to www.fbox.tech/contact to learn how FBox can help you optimize your digital infrastructure today. Alrighty, Matt Kimmel, Mr. Difficulty Weatherman. Things looking good. Things looking a little better, but not that great. What's going on in the mempool?
Yeah, things are looking like you get a bit of an ice cream cone release on a hot summer day, but it's just kind of melting because we were at all-time high of 125-ish thousand per coin. Things were looking great from a price perspective. Headlines come out. Trump drops the hammer news of tariffs and potential reigniting of China-U.S. trade war. Of course, that happens late Friday, where Bitcoin is really the only game in town to trade over the weekend. It craters. We're now hovering around 108, 109,000 per coin, which has had a very unfortunate impact on the hash price, right? We're now under $50 per petahash second per day. At 47, our friends at Luxor have us for hash price. And but as you said, a small bit of reprieve. We just got a downward difficulty adjustment. We're 64 blocks into the epoch right now, a little over a 2.5% decrease. And we were on a tear of increases over the last couple months. So it is good to see, but hash price still it's trending in the wrong direction, mainly driven by the price action. And fees, there's nothing to talk about. It's the same story. It's been the same story for fees. Fee market's very dried up. What are you guys seeing out there? What do you think of the environment right now?
Transaction fees right now, really at an all-time low. I shouldn't say all-time low. There's been times where it's low, but there's just really no light at the end of the tunnel on fees. There's not really much L1 activity. Ordinals and runes completely wrecked, and that was really the reason we saw any sort of fee activity in the past. So that's and right now it doesn't seem like there's really that much interest in ordinals and runes. There's all these NFTs that are launching on other coins and chains and things like that. And it seems like the interest has kind of gone that way. There's a few, we do have a few of the L2s that are getting closer. I know Citria is getting close to mainnet, which, that would be a block space consumer. Not the media company, the actual physical block space, but they are coming soon. And there's a few other L2s that I think are getting closer to actually launching mainnet. But again, it's hard to say whether those are going to drive a ton of volume in terms of fees. So in that case, we are at the behest of difficulty. That's really the main component that's moving in Bitcoin mining. That's really in the Bitcoin mining hash price calculation. It's really the only leg of that's moving. And then of course Bitcoin price. If you denominate your Bitcoin your mining hash rate in USD. Most people don't anymore. They usually kind of are using Bitcoin denominated hash price. But at the end of the day, we do pay our power bills in USD. So you got to generate enough USD to cover those power bills. And it's getting harder and harder to do so. The previous low was somewhere in the mid high 30s, around 36 or so. Hash rate generally seems to go up most in Q4. The reason for that is generally it's easier to run machines in the winter time when it's cooler, and you don't have to worry about those 4 CP intervals that we see over the summer months, June, July, August, September. You're trying to avoid getting that high watermark measurement. So miners are kind of consistently kind of tuning down, especially in ERCOT, where we think the majority of US hash rate is based. So just a lot of factors. Unfortunately, none of them are really positive right now on in terms of some relief on the mining front. It's going to probably continue to compress here. So miners got to learn to optimize, improve efficiency where they can, figure out how to avoid those really expensive power prices using what we call economic dispatch signals and that sort of thing. So overall, that's kind of what I'm seeing on the mining on the hash rate side.
Nick, you raise a good point with Satria. I feel like these L2s are this kind of far off Canaan for all of the Bitcoin miners. It's like, there's the land of milk and honey. If we can get these things launched and if these things can attract volume, we are going to reap additional fees for that. I have the same questions for you of like what the demand for these will be. And I also wonder, if they do launch, if these launch in Q4, where does that place them in the market cycle in terms of optimizing for those fees? Because if it's frothier, those things are going to be used more. And I just wonder, at least right now in the short term, how much those would help, or if later on in another cycle when things are frothier, if they would generate more revenue. Just kind of an off the cuff thought, go ahead.
Are you saying these L2 should have launched earlier?
I'm not saying they should have done anything. I'm saying that maybe if they launched earlier in the cycle, they would have been more useful for miners. I still think there is a question of how useful they will be. I'm not convinced that you're going to be able to port the people who like the things with Ethereum and Solana as easily to Bitcoin. I don't think that right? It's not a lateral move, I think, in the way that a lot of developers or people think that it will be.
That's always been sort of the case as far as I can tell. So there are L2s out there that run today. There's sort of side chains, with the trusted bridge and that sort of thing, but they don't get a ton of activity. You can look at RSK, you can look at Stacks, you can look at even like the Thesis guys, TBTC. They just don't get a ton of interest from folks. And like you said, it's really because ETH people are used to using ETH things, or maybe just degens in general are used to bridging Solana, bridging ETH to Hyperliquid or whatever it happens to be. They're used to that stuff all in their world over there, and Bitcoiners just don't do that sort of thing. So we'll see. I think there was a meta kind of early in Q3 for airdrop farming, and it doesn't seem like there's too much airdrop activity coming from these L2s, which does kind of hyper, I guess how do I say, supercharge the uptake of a new project, but there just hasn't been that yet. So we'll see. It certainly could be a surprise. It seems like something that's sort of slept on, which is maybe it's an opportunity, but as of right now, there really is no light at the end of the tunnel, unfortunately.
I think it's an uphill battle for the Bitcoin L2s. For a lot of the reasons, you're the new arcade in town, right? And there's another arcade, and everyone's already hanging out there, and the games are already established, and they already have their pizza recipe. And how are you going to get everyone to come to your arcade, right? I think that's the challenge. There's already a bit of a network effect established in tooling for developers and apps, and that's a bit of a moat to overcome, I think. And I have. I tend to be in the camp that's going to be more difficult to breach through than some enthusiasts in the Bitcoin community kind of believe, right? And we tout the resilience, the reliability, right, the security, decentralization of Bitcoin, which are all correct. But the question is still out, right? There hasn't been network outages in some of these other ecosystems in a while, and they, are more centralized, and how much do people care about that for some of these games, for some of these arcades, right? For the services that they're providing, how much does it matter? And then this kind of shadowy presence of the ETFs, and it being like, okay, you have this Bitcoin wrapper vehicle, the securitized version that is now, broadened. It's not, as hamstrung in the world of traditional mainstream finance, where you have access to a lot of the same financial services institutions also providing a lot of different ways to use it, right? That we theoretically thought you would have, Bitcoin native digital services of those same things on L2 ecosystems. Well, now they have to play a little bit behind the eight ball because some of this stuff already exists and people have already kind of tapped into it a little bit. So
I'm sure you guys have been to Vegas. There's some really nice casinos there, and if you want to be the newest casino in town, it's got to be really special. Because people still just want to go to the Bellagio. That's at the end of the day, they just go to the Bellagio because that's what they know. It's the nicest one, and if you want to open a new casino, it's got to be really good.
Let's hop on to the next mining story. I like the casino and arcade analogies. I'm going to steal those. We'll try to move quickly through this one. There's not too much to say, but just wanted to share it. It's a scoop that we got this week. Mara quietly removing their CTO, Ashu Swami, from their executive team. So we got a tip of that Ashu was on the way out from Mara, that he was let go this summer. We went and checked Mara's management team page, and indeed he was missing from the management team page. He still lists Mara on his LinkedIn, and when reached out for comment, a Mara public relations representative said, as a matter of policy, Mara does not comment on personnel matters. And we took that to read that there's something happening here and we're not going to say anything about it. So not really too much to add to this other than I think a few things looming in the background that people might be thinking about with this is one of the infrastructure product lines that Mara has been pushing for the last few years is this 2PIC immersion solution, which is an immersion cooling, hardware design for Bitcoin mining, and they also market it towards GPU for AI and HPC data loads. And as far as we can tell, Mara has never really disclosed any meaningful revenues from this on their 10Qs or in their yearly filings. And there's no clear indication that this product has ever taken off. So one of the questions swirling around with this is like, how much is this related to 2PIC? What's the future for that product line? Are they just going to quietly shelve it? That's just a few of the open questions I have from this. Curious if y'all have any second thoughts.
Yeah, so 2PIC's been around for a little while, right? I think they announced it at Empower that had to have been 2024, almost 2 years ago, right? That would have been the last Empower. It didn't go well. I don't want to get too into it, but it did actually blow up on the conference floor. So maybe
during
I'm not
the live demo at Empower.
Yeah, it was running
March 2024.
It was like running at their booth, and like there was a big puff of smoke, and people kind of screamed, and I was just happened to be onto the side, and so it's not like I'm breaking any news here because that did happen, and there were a lot of people that saw it. So I'm not sure if Ashu's departure is related to 2PIC, but that seems to be kind of the prevailing rumor as far as we can tell. But then Fred tweeted about it today, so hard to say. You never really know. And I guess everything that I just said is pure speculation.
You never really know exactly why these personnel decisions are made unless you're in-house. I guess what I'll just add as well is Marathon's tried to do kind of more ancillary services as a mining company. Slipstream, right, comes to mind, the transaction accelerator. I think they were playing around with an L2. I don't know the success of all of these things, but I would think the CTO would be quite involved in some of those projects. I think the market has, investors have kind of swung more towards AI HPC focused companies, right? And I think that some of those projects haven't, paid off as far as outcompeting from a valuation standpoint. Some other strategies, maybe that has a part to do with it, but it's all speculation, right? We're not in the company. I don't know. But this is interesting news you broke here, Colin. I didn't know about this before we started the show.
Yeah. Shout out to Will. He did a good job writing this one up. And yeah, it was kind of a nice scoop. I think that it would have been more consequential for investors, obviously, if it were like Fred Thiel. People didn't seem that enthusiastic about it, but I think that still a big deal. One of the executive team.
We are CleanSpark, America's Bitcoin miner, a publicly traded company with the largest operating hash rate, powered entirely by self-operated infrastructure across 4 states. This is our proof of work, and we are setting the standard for what's next. Learn more about the intersection of energy and Bitcoin at cleanspark.com.
We'll move on to an AI story this week from a miner that we don't really cover very much because they're not always in the news. The headline here is Nscale secures 200,000 GB300 GPUs contract with Microsoft in a 240 megawatt lease with Ionic Digital. So Matt, can you give us a little context for what's going on here?
Yeah, I mean, you just gave it. I think this kind of AI cloud startup Nscale is brokering a bunch of machines for Microsoft. Looks like in collaboration with Dell. So some big names involved here, but they're using, lease from Ionic Digital, who, they're, I guess we'd say, relevant in the Bitcoin mining space. I believe Nscale too was a spin out of a former Bitcoin miner. I think Akron Energy. You got it right here in the article. Akron did Energy in May of 2024. And everyone's trying to get a piece of this monstrous growing revenue pie that is the AI trend, right? And this feels like a piece of that.
Yeah, and I think the takeaway for me with this is just like even the miners that you're not thinking of as being in this conversation or having these conversations, I wouldn't have put Ionic Digital, again, on my bingo card for something like this just because they haven't been vocal about it. They've had some shakeups. They're trying to IPO right now. They've had leadership changes. But this deal is pretty massive. Microsoft has an option to expand to 700 megawatts starting in 2027. Initially, it will be 240 megawatts beginning in Q3 2026. If the full contract is exercised, that's 1.2 gigawatts starting late 2027 or into 2028. So, the big takeaway for me was just these deals are going on in places that you don't even know. Anything to add, Nick?
Not on Ionic, unfortunately. I don't know much about what's going on over there. As far as
it's open for a little inside baseball.
Yeah, I don't have much on them. I know their fleet's pretty old, right? That was all the Celsius machines. And so those would be all of the J Pro kind of series. So, they've got to be looking at, either turning those off or refreshing. And so I don't know a ton about Ionic right now, unfortunately. That's a bit of a blind spot in my repertoire.
Yeah, all good. Just something to definitely keep an eye on for us at the Mining Pod. All right, on to the next story. Brief note here. PJM Interconnection needs 43 gigawatts of energy storage by 2045, Brattle Group. So this Brattle Group released a study where they argue that the PJM interconnection market, which services Ohio, Pennsylvania, some other Rust Belt states, is one of the larger ones, and it has some similarities to ERCOT in the structure in terms of how miners can manage their contracts. But they're saying that to meet these green energy goals, they're going to need 43 gigawatts of battery storage by 2045. Part of this is in mind with all these AI and HPC data centers that are going to be built out. Bitfarms is working on one in Pennsylvania right now with its stronghold acquisitions. Not really too much more to say on this other than for some people, like the green energy narrative is clearly not dead. And also this is just one to file into how prepared is the US for an actual, CapEx explosion for these data centers. There's a reason all these Bitcoin miners are first in line for these power shells because they're the only people who've been buying up blocks of power relentlessly for like the last 5 years, right? Well, once all of those are gone and we look at the fact that we're not adding baseload quickly enough, where does that leave us? I don't have a good answer, but I'm just kind of throwing that as an open-ended question.
I don't want to frame batteries, maybe 5 years ago, even 3-4 years ago, were kind of considered like green energy, like Teslas and EVs and everybody running batteries. really think it's just another grid stabilization tool. Whether that's green or not, I believe that's up to the reader. Obviously you can charge batteries with intermittent, renewables. So solar and wind, which is probably green. Most people that are greeners would consider that green, I suppose. But I would say it's much more
PJM's grid is a lot of nat gas and coal.
Yeah. And so exactly. I would say, bucketing batteries in as green, certainly I wouldn't say that. I would say that it's certainly a grid tool. And I think we can look at, there's another podcast I listen to called Transmission, which is all about like energy markets and stuff. And it's generally kind of focused on the UK. And they talk about batteries so much because there's so much, renewable intermittency there that they've done a ton of capex on batteries, and the way that they've deployed batteries in the UK is really, really interesting. They trade just like an asset. They're basically the inverse of a Bitcoin miner. When power prices are high, they're willing to emit energy, where Bitcoin miners turn off. So it's a really interesting, kind of dynamic in the UK, and this podcast kind of goes into all of that. The green aspect, certainly notwithstanding. But I think it's more just like battery storage is a grid stabilization tool. And I can see batteries just absolutely booming. Jesse Pelton on Twitter talks about how much battery, storage is being built in China, basically every year. It's like in a year, they produce more batteries than, the US has installed. That's just production. Or it's some crazy number like that. Maybe the facts are not exactly correct, but it's a staggering amount of battery that's coming out of China. And I think, we better catch up.
And Haley on your team on the energy desk, Haley Thompson,
yes,
was the first person to really tune me into how much batteries have helped Texas. Because part of the duck curve with the energy, production over there, given how much solar and wind there is, obviously this has led to problems with shortfalls on the hottest days in the summer. But Haley was pointing out, as they've started to roll out more batteries, you're starting to see that smooth out a little bit more, because you can actually store that energy long term and then use it when you're at peak. So I was definitely sleeping on the battery solution. I was kind of bought into this is, we're still it's basically, what is it, like glorified double D batteries, and so I always kind of bought into that. But after hearing Haley's arguments and hearing you talk about it, does make sense why this is going to be a crucial component of the grid going forward. Matt, do you have anything to add before we hop on to Bitdeer?
How will our grid operators and power generators be able to handle the stress test of the AI era, right? I think that's really what this is about. It's that kind of outstanding question. Batteries are, I think, eloquently put by Nick as a potential outlet and solution, right? That can come in with to basically service demand when prices get high. So I think we'll see. There's been for a long time, there's been research and the desire to reduce the cost of batteries to make it applicable in different scenarios.
We will move on to Bitdeer and their gangbuster month. Bitdeer mined 20.5% more Bitcoin in September than August. And they also have some updates on AI and HPC, which I will tackle here in a second. But Matt, I'll let you give a quick recap of Bitdeer's September.
Yeah, so Bitdeer September update numbers mined 452 Bitcoin, a 20.5% increase month over month. Self-mining hash rate goes to 35 exahash per second. There's been a lot of talk with Bitdeer about their Seal Miner rig manufacturing, basically initiative, right? But this report tends to kind of boast more about their self-mining, I think, is the way that the market has read it. The huge reaction from investors yesterday, I think the share price was up 25-ish% on the day. So major jump off of the back of this release in an environment we talked about earlier of being kind of harsh for miners, right? But the equity markets don't care.
Yeah. So just a few highlights. I've got the Bitdeer stock chart here. It's down today because of that run up, but per Matt's note, it's like up 21% over the last 5 days, and it was like 25% yesterday. Some interesting notes from this. we're starting to see the impact of Bitdeer's ASIC manufacturing line. I would love to run an analysis of like how much more quickly they can get those ASICs online versus if they were buying from Bitmain or MicroBT. Maybe it's not that much of a difference. Maybe Nick can speak to that in a second.
Yeah.
But clearly making an impact here on their hash rate growth. And they're only selling about 20% of these to other miners. So like the majority of this hash rate, lion's share is going to Bitdeer, and they're lowering their CapEx cost for that hash rate accordingly. One of the more interesting, I think, vertical integrations in Bitcoin mining. But the other big thing, I think, the reason why Bitdeer is rallying so much on this news is they also announced in that production update that they plan to have a PowerShell online for AI and HPC co-location sometime in 2026. And I think it's Q1 of 2026. And they estimate that they will earn $2 billion in annual recurring revenue from that. Now, this is kind of a trust me, bro moment because it's like they didn't announce who the tenant is. They just said it in their update. There hasn't been like a press release. There's been no formal announcement of who is going to fill that slot. Be a crazy thing to advertise if you didn't have something lined up, though. Nick, do you have any thoughts?
Yeah, so I think to the point about their miners, I think there's a couple things on that. One, yes, I think they will be able to plug those in a lot quicker because they control end to end. When they come out of the factory to when they show up at the site and get plugged in. Also, I think their costs are going to be significantly lower. Obviously, they had to expend a bunch of CapEx up front to make those machines, to like build the processes and put down the deposits for the chips and all the CapEx that goes into it. But actually, manufacturing the machines probably very, very cheap relative. So they're probably printing really cheap machines right now, which is a huge win for them. So they're all that CapEx that they spent up front is now reaping all those benefits. And I think that's going to even optimize with their new series. They're going to have A3s or A3 Pro coming soon, and I think that's all going to kind of feed into the Bitdeer flywheel. And then I think when I was looking at Bitdeer a year ago, their biggest asset was their power pipeline. They had a massive power pipeline, and they're really starting to monetize that now. So I think the sky's the limit for Bitdeer. I think it's one of the better bets in the space just because of that total vertical integration. You look at a company like Bitmain, and it's hard to say exactly what Bitmain is worth, but it's probably well into the $20+ billion range because of how much they mine, how much they sell, and all of the business lines that they're kind of involved in. I can see Bitdeer kind of running that playbook, but in a little bit more transparent way on U.S. public markets. So I think the sky's the limit for Bitdeer.
Not financial advice, but
not financial advice.
No, I'm just throwing that in there.
Them as a company, there's a lot that they can do. So
yeah, just throwing that in there tongue in cheek. All right, last story before our cry corner, and then we'll get y'all out of here. BlackRock, NVIDIA-backed group strikes $40 billion AI data center deal. So this is coming at us from Reuters. I'm reading directly from the article. An investor group, including BlackRock, Microsoft, and NVIDIA, is buying one of the world's biggest data center operators with nearly 80 facilities in a deal worth $40 billion to secure coveted computing capacity for artificial intelligence. The purchase of U.S.-based aligned data centers from Australia, Macquarie Asset Management on Wednesday is the first deal for the AI infrastructure partnership formed last year, which includes Abu Dhabi-based MGX and Elon Musk's startup XAI among its backers. It seems like the Saudis or like the Emiratis and Elon Musk are just always in these stories. It's the usual cast of characters. I don't really have anything to add to this in terms of like what this means for the traditional data center field, other than $40 billion deal and acquiring like one of the largest data center companies in the world. I mean, it seems like every single week you don't think that another crazy headline with another eye-popping number can come out, and then it does. So I guess my open question to the panel here, are we getting frothy here? What's going on? I mean, obviously things seem to be getting frothy. I think the biggest question for people right now is like, how much does this rhyme with the .com boom? Because the thing that I keep coming back to is like, unlike the .com boom, I can actually go on to ChatGPT and see my productivity increase immediately from that. So, yeah.
Microsoft, maybe 2 years ago, the CEO of Microsoft came out and said, I think the biggest risk for us right now isn't over allocating to under AI, it's under allocating. And so maybe there is a bit of a boom and people are overpaying for price right now, but it feels like we're overpaying for this compute right now. But maybe we're just in price discovery, and that's just the price of compute. So I think that I do actually believe that maybe at the time, the Microsoft CEO, I think that when he said that, it was very poignant, especially at the time, that over allocating is less risky than under allocating. And it seems like they definitely reaped the benefit of that thesis, and probably that stays true. So even if you over allocate today, your ability to monetize that compute is certainly going to be there for a long time, because AI is not going anywhere.
And we've seen that with the crazy contracts that guys like Zuck are trying to sign for some of these engineers, right? It's like, what is it, like $1 billion over 10
Literally
years?
$1 billion. Yep. They're like going to and saying, we'll give you $1 billion. And to them, that's a rounding error, because if they are able to capture even 1% more of the market because of that brilliant person's, input, that's right, way more than $1 billion. So, it's certainly, it is frothy, but I think it's for good reason, where you kind of see other, big run-ups, very speculative run-ups where there isn't as much substance, like .com era. Hey, even if you look at the .com era, maybe they overran, but there was a lot of value in the .com era actually generated. Google is the product of a .com era. Actually, all of the companies that we talk about today are the product of .com era. And I guess it really just comes down to, are you allocating the capital correctly, or are you kind of chasing the rabbit, I guess?
The .com era certainly got ahead of its skis, but was right eventually. But what this kind of reminds me of a bit, because it's so physical, is car manufacturing, which built out the Rust Belt, right, and didn't really actually get ahead of its skis. And so it could be like that. When you have something that's that much of a breakthrough, it could be like that. Now, maybe it is a bubble and it's going to get too frothy. There's certainly a lot of speculation that happens in markets. I mean, there's not an asset class out there right now that isn't at all-time high, and these things don't tend to happen in a straight line. So I'm sure there's going to be, corrections on the way. Is it going to be a bubble bust, I think, is kind of the question you're getting at, Colin. And that it's hard to tell. It's how much of a breakthrough invention is this? How much is it going to impact our productivity and GDP, right? It could grow us out of a pretty nasty, financial hole potentially, right? And but when I look at this story in particular, I think it just is a beacon call on the sense of urgency that there is, because we're talking about NVIDIA, Microsoft, and BlackRock, the largest asset manager in the world, right? Microsoft, big seven firm, NVIDIA, largest company in the world, $40 billion with a B, right? That's larger than all of the listed Bitcoin mining stocks a year ago. Now because of AI, I think we're around 90 billion, right? So still half of the market. But it can't be understated how much investment there is. And this is just a singular acquisition, right? Buyout of the physical side of AI too, right? The data centers. But we've been talking about this story for over a year, and we're going to continue to talk about it. I think ChatGPT's really blow up moment was November of last year, maybe. Is that right? So we're not that far into this yet. Yeah. Right. We're just not.
I really like the analogy to the auto boom, because obviously the .com boom had a physical side to it. You had to build out data centers. You had to build fiber. You had to build all of the infrastructure to support the internet. But the CapEx spend and the infrastructure need for AI and HPC loads is drastically larger, right? And so this feels much more like a physical hardware kind of boom, right? Rather than the software boom that we've experienced since the .com bubble, right? And up until this point. Obviously, there's still software involved in this, but my point is the focus here is much more on energy, much more on making sure that we have enough data center capacity.
One last note here. It's OpenAI, right, is the front end that we use. ChatGPT, that's kind of the software side of things. I think their valuation is very high. They're one of the largest private companies in the world. Something like they raise at like 500 billion. But you read how much is being spent on these energy deals and the physical side of the data centers, right? And it dwarfs the software side. It absolutely does.
100%. We're getting back into builder mode, boys. All right. Let's move on to the Cry Corner, and then we will close out for the day. A little bit of a longer show. Appreciate y'all hanging in there. So we've got a Bitcoin recovery case here from our friends, our favorite Fed-aligned blockchain analytics platform, Arkham. Love the stuff that they put out. Please take that with a grain of salt. The U.S. government may have seized an additional 2.4 billion Bitcoin from Chen Xi. 2.4 billion of Bitcoin moved out of Liu Bian associated wallets today, which may have represented U.S. government seizures. This is in addition to 14.1 billion revealed yesterday. So, for those who are just tuning into this, this is basically a bust of a multinational crime syndicate that basically just like scams people and fleeces them out of their money. And this one Chen Xi is a Singaporean national. And he is the CEO and chairman of the Cambodian conglomerate Prince Holding Group, and was charged with wire fraud conspiracy and money laundering conspiracy for directing Prince's operations of forced labor scam compounds in Cambodia. So basically, they were running these forced labor operations. They were also extorting people for cryptocurrency. All that being said, the question now remains, does this Bitcoin go into the strategic stockpile, or does it go back to remunerate people who were scammed? I think it'll be the latter, but not really too much else to add on this other than this a lot of Bitcoin.
That is a lot of Bitcoin. And you think that it's going to be used for remuneration?
I mean, I'm saying it could. I mean, that has happened in the past. I mean, maybe they don't, but yeah, probably not. I'm saying they could if they wanted to. They really wanted to. They could.
I don't think that they do that. This is what they call the pig butchering, right? Case. You heard this term, pig butchering?
No.
Okay, it's a type of scam. It's called pig butchering. It's basically it's like a long scam where you convince somebody that you are able to use their capital to generate huge returns. Like there was a guy recently that worked at a regional bank, and he ended up like funneling something like $40 million from the regional bank to these scammers because they said that they could get him a huge return and he would get to keep the majority of the upside. And they ended up just taking the money but it was like a long scam. Like it took a long time for them to actually build up the trust and do it. So the idea is like they build up, you've heard the like fatten a pig. So they like fatten the pig for a long time and then ultimately kill him. So, and I think that's what this was. This was a pig butchering scam where they had people like working like long lead time scams. I like to say, don't send people money that you've not met in person.
Yeah, just don't send money to strangers.
Don't send money that you haven't met in person.
I'll add pig butcher to the terms of things you can call SBF. Then I think that class is similar things to what he did.
SBF, man.
It put me in the camp of the U.S. government is going to keep this in the reserve. I just find it hard to believe they're going to. I mean, the Bitfinex hackers, right? Bitfinex didn't necessarily get that, or those clients did not get made whole. I think those coins are still a part of the strategic reserve. And these seizures are a budget neutral way of accumulating Bitcoin in the reserve, right? Which is the mandate of the fund. My thoughts and opinions on that. I don't know how I feel about it, but it's, I guess, interesting nonetheless. The pie grows for the U.S. government, it seems.
Color me naive for hoping that people will be made whole, but I agree with y'all. Alrighty, we will close out there. Appreciate y'all tuning in, and we will see y'all next week with the Tuesday interview and another roundup on Friday. Peace and love, y'all. Have a good weekend.